Call the meeting to order. Was the meeting properly noticed?
Yes, it was.
Please rise for a moment of silence and the Pledge of Allegiance.
Mr. Chair, I'd ask that we take this time and recognize Charlie Kirk and as a National Day of Remembrance for Charlie Kirk, as this would have been his 32nd birthday, and just ask that we continue our prayers for his loved ones, as he used to pray for all the citizens of the United States of America. Thank you.
Clerk, please take roll.
All members are present.
We have the agenda before us. Do I have a motion to approve?
Mr.
Supervisor
Chair.
Hick is there.
Question for you on the agenda.
We don't have the agenda on the floor yet, the motion on the floor yet, so.
Fair enough.
Second by Supervisor Baker, so. Okay, question on the agenda.
So the preliminary budget presentation wasn't uploaded until about 8 o'clock this morning. And I'm wondering if it is proper for that to be included in tonight's presentations, as that was not properly uploaded 24 hours in advance for people to be able to review.
Presentation doesn't have to be available for review
Fair enough.
beforehand, so.
Is there any reason why we didn't get that updated? I believe it was available for admin and finance.
No, so.
Is there an explanation?
It just wasn't loaded. I don't know.
Well, how do we properly prepare for these meetings if all of the agenda content's not provided?
It's just a presentation, so it doesn't have to be acted on tonight.
Fair enough.
Okay. So seeing no further discussion, all those in favor to approve the agenda signify by saying aye.
Aye.
Those opposed signify by saying nay.
Nay, Supervisor Pozdolski.
The agenda is approved. Do we have a motion to approve the minutes from September 16th? Supervisor Scott Pease, second by Supervisor Churko. Any discussion or questions? Supervisor Pozdolski.
Mr. Chair, there's just the question here, why we have item number 7 and 10. Why don't we combine those? Why are these separate? And furthermore, why is it so hard to navigate? When I click on these minutes, it's like navigating the jungle gym. It's really hard to find the minutes, and we wonder why.
Well, the minutes are the board minutes that we're approving here, and the other minutes are the committee meeting minutes. So that's the
Right, but I mean,
reason.
when I click on these, I've had this issue before.
You should talk to IT at some other time.
They should open. It shouldn't be. It open. I can open every other tab. Why is this the case where I can't open this? It's just.
You can talk to IT
straight.
before or after the meeting. So
Thank you.
Supervisor McLaughlin.
Thank you. I don't know if this is the proper time or not, but I think everybody sitting in at least up there knows that an agenda should be assembled such that an average person can read it and know what's going to be discussed. Number 10 wouldn't fit the bill for that, saying only minutes.
We're talking about the board minutes to approve here
Right. I have one more comment, and then I'll.
on the board
So-
minutes.
Yes, this would pertain to the board minutes and our recorded videos. Why are we waiting 10 minutes before the recording starts in the video recording videos? It seems, I mean, when we watch these videos, we got to go 10 minutes into it before anything happens. And a lot of these cases, like the committee meetings, we wonder why this is. We're going 10 minutes into recording before anything
We're
happens.
talking about the board minutes here.
But these are county board minutes too, and these are the way we record these meetings, minutes.
That doesn't have anything to do with the minutes, so the
Well, sure it
question,
does.
no, it doesn't. The question is out of order.
So any questions on the county board minutes? Seeing no, and all in favor signify by saying aye.
Aye.
Those opposed signify by saying nay.
Nay, Supervisor Pozdolski.
The minutes from September 16th are approved. Okay, we don't have anybody signed up for public participation. Clerk, please read announcement of meetings.
The 6 supervisors were SPs, D. Grabarski, Dozel, RPs, Shelton, and Carlson. Churko 53118, Paler 23654, Gilner 205, Barud 17720, SPs 35180, D. Grabarski 19360, Dozel 6466, Crivello 62, Hickethier 55, Bork 25, Edwards 427, RPs 391, West 85390, B. Grabarski 27740, Carlson 17560, Sammelstead 6620, Baker 19408, McLaughlin 83, David 55, Folish 55, Harvey Beaversdorf 55, Moans 12120, BPs 55, Paler 7866, Townsend 55, Law 55. Total 4,902.
Okay, thank you. Committee minutes are attached there, and then we'll start with the 2024 audit presentation, and Amber's going to
Mr. Chair,
come up and cover that. So yes,
I
go ahead.
would, I would just like to introduce Amber Danielski, so from Clifton Larson Allen. This is our external auditors. And as you see there, it's the 2024 audit. She's the signing director for the state and local governments.
Good evening. So I'm here to go over the audit for 12/31/24. And on the agenda for the different slides that I plan on going through is just overall discussing a little bit about our audit scope and our process, what the audit opinions were, various financial statement highlights, and also some upcoming new items that the county board and overall county employees need to be aware of that are coming up that'll affect how certain things get handled in the audit, in your financial statements, and just overall day-to-day operations. So first starting out, when we talk about our audit process, we do risk-based auditing. So what we do is we come in and do some preliminary work. We read board minutes, we read committee minutes, we talk to various personnel throughout the county and review trial balance reports and items like that to determine in various parts of the websites, the county website as well, to get a feel for what happened during the year. And then we also review internal controls and software and different activities throughout that to determine where do we need to spend the bulk of our time, because obviously as activities change, we may need to spend more time here or more time there. And then we look at, okay, what type of revenues do you collect? Are those just all mainly cash coming in? Are there billing systems being used? How is that all being reconciled? Then we look at significant estimates. So there's always going to be estimates in your financial statements because, you know, you buy a squad car, you think it's going to last, 5 years, but maybe it lasts 7 years or maybe it lasts 3. So there's estimates in there. There's also other things that cause estimates as well. But we look at that kind of stuff. We look at the type of debt and how much debt that you have and take that into consideration. And are there debt covenants that might require certain requirements to be met? And then we take one look at, are there new accounting rules that have to be put into place during the audit? And we take all that into consideration and build our process and build our tests. And some areas we test 25 disbursements or 25 receipts. Sometimes we might test 40. We don't test every single transaction because there's just too many to go through. And that's where we do that risk-based audit. And ultimately that all accumulates into our audit opinions. So we do 2 different types of audits for the county. The main one is your financial statement audit, and that audit opinion is unmodified. What that means is based on the results of our testing, we felt that the numbers and the financial disclosures reported in the financial statements fairly presented the balances of the county as of the end of the year. This is a quote unquote clean opinion, and this is what the county strives for. Then, because the county spends more than $750,000 in federal funds every year, you have to have what's called a federal single audit. And then in the state of Wisconsin, when you have a federal single audit, a state single audit kicks in. So then we do specific testing on various grant programs and focus a little bit more on compliance. So some areas we might look at, are you getting provider audits on time? Or are you, did you do some eligibility stuff the way you needed to, according to what the DNR or the federal government says you need to do, depending on the grant. So we look at all that, we look at that kind of stuff. We're not required to test every grant that you have that would qualify here, but we're required to test a certain percentage. And the end result of all that testing as well was that we had an unmodified audit opinion. Overall, for other audit results, we did have a few findings. Some of these I've talked about every year, and they're not necessarily unusual, but they are just things that we will discuss briefly. So for financial statements, there was one material weakness and one significant deficiency. These are the two same findings as in prior year. One is the financial statement prep, which, as I've mentioned in years past, a lot of municipalities, a lot of governments, a lot of counties outsource that to their financial auditors to prepare, just for cost benefit purposes. Because these reports, they're 100 and some pages long. Just for cost benefit purposes, do you want your finance director and the audit and that team, taking 40 or 60 hours out of their work day or work weeks, multiple weeks to prepare that? And so for cost benefit purposes, most governments hire that out, but it's just something to be aware of. Then the second finding was in terms of audit adjustments. So every year we look at the list of proposed audit adjustments that we made based on our testing. And we look at those from a qualitative standpoint and a quantitative standpoint. And when both of those items meet, we then assess, is this a material weakness or significant deficiency? And do we even need to show it as a finding at all? We look at the factors behind it plus the dollar amount. And so we did have this finding this year. There was a couple things with Wisconsin retirement and pension and some different other liabilities. And we've worked through with Kyle different things that the county can do going forward to help potentially eliminate this finding. And again, it is something we look at every year. It doesn't necessarily mean this finding gets repeated every year, but it is, we take it on a year by year basis. And then on the federal awards, when we're looking at your federal grants, we did not have any findings for those. And on your state awards, we did have one significant deficiency. What we found when we tested some DNR grants was that when the reimbursement request was sent to the state, there wasn't another review by somebody else before it got sent in. And you always want to have that extra layer of review on the reports because they can catch a potential clerical error or other error that might impact your funding. So nothing significant, just something to be aware of and something to maybe consider having another person review that before you ship it off to the DNR or any other granting agency. Again, you always want to have that second set of eyes. Any questions on that? If not, then we'll move to GASB 101. So as I mentioned before, one of the things we look at is if there's a new accounting standard that had to go into effect for your financial statements. And for 2024's reporting, there was a new rule in regards to compensated absences. So this is your PTO balances, your, vacation, sick leave, comp time type stuff. And historically, before this new rule came into effect, you always did track a liability for it. So basically, maybe more of just what you anticipated being paid out at retirement or whatever the policy said when you got term, basically the payout part. Where now this new rule wanted you to consider, okay, so yes, you think they're tracking this balance and when they retire in 10 years, they're gonna get this payout. Well, but they might actually use some of that balance too beforehand. So what are you, it made you step back and look at it a little differently. The results of this, looking at this stuff a little differently, basically increased the liability for the county as a whole between your highway and your governmental activities by $218,000. Not overly significant. We've had some that this increased millions and millions of dollars because of the way their policy is written. It all starts with the way your policy is written and what is allowed to be paid out or carried over and goes from there. Again, 200,000 might sound like a lot. It could have been higher, but again, it is just something new that changed for 2024. Moving then into just some general financial statement highlights. There's 5 different categories I'm going to walk through here. Starting off with your governmental funds. So these are your general funds and all your special revenue, debt service, capital projects funds. This does not include solid waste or the county highway enterprise fund. So just wanted to show you here how fund balance has changed and fluctuated over the past 5 years. So in 2020, we're below $30 million in total for all those funds together. But now at the end of 2024, you're at $35.6 million. Well, how did you get there? There's a number of factors. Some of it is having good budget years where, maybe costs came in a little lower. There's also better sales tax years or better interest income years and different other factors that play into it. And so overall, your total fund balances are enough to cover your operations for what you need for all those various funds. And we'll dive into a more in depth to your general fund on the next slide, because that's obviously where the majority of your operations are. So your general fund at the end of the year had just under $13.1 million in total fund balance. And as I've spoken before, this fund balance gets broken down into a couple of different categories based on the accounting rules under GASB 54. But we'll focus a little bit more on the bright orange box. So that's your unassigned fund balance. That's $8.7 million. And you'll see that amount has fluctuated a little bit depending on over the years, but that depends at times on what's in that other category. So that red category is assigned fund balance. That a lot of times is what you've used to balance the budget in the next year. So if in some years when you may have had to use a little bit more fund balance to balance the budget next year, that amount fluctuates a little higher. But overall, the total of $8.7 million is sitting pretty good in terms of what you have set for your policy and what we would overall expect to see for unassigned fund balance. Because that unassigned fund balance is the amount that's basically, it's not set aside for anything else. So if there was an unanticipated expenditure in 2025, you'd have funds to cover it. If you needed it just for making sure you have enough cash flow so you can easily meet payroll and easily pay your vendors, you're easily meeting that where you want to be for that. One thing the county has done to kind of monitor that unassigned fund balance is it has set its own policy where it wants that total to be 15 to 25% of general fund expenditures plus transfers. And so currently you're at 45%. Now this graph shows what we look at an industry perspective. We don't necessarily take into consideration the transfers out when we look at that factor from the industry perspective. So you're at 54% for that, and then 45% for your own policy. So you're meeting and exceeding your policy requirements. Any questions on the general fund? Seeing none, then we're going to switch into talking about your two enterprise funds, Highway Enterprise Fund and then Solid Waste will be next. So enterprise funds are set up by the accounting rules to work more like a business. You want to record these more on full accrual. So you're going to have assets. You're going to have, more like a normal business. You're not going to have some of these things where if you have debt, you're not recording that liability. On this kind of fund, you would see that item. So over the past few years, your Highway Enterprise Fund has had some years where you've had an operating loss and some years where you've had an operating income. So ultimately, you want to see that number hopefully positive, because that means there's enough revenue coming in from when you're billing the state and billing other municipalities or billing other departments to cover your operating costs. So you want to make sure that's as positive as, positive is better than negative. But then again, some years you're going to have a negative just because the way the funding works. So the state sets your rates one year, so there's basically a lag time with that. So it helps you to try and recover and keep it even. Now you'll see the total revenues and total expenses do fluctuate by years. 1 year you had $7.4 million. A couple years later, you're down to $6.2 million. And then the next, like 2024, you're up to $11 million in revenue. This happens based on the significance and number of projects being done, because all the billings done to the state or to the departments or other municipalities is based on actual time and equipment use and everything like that. So that's where that fluctuates. Any questions on the Highway Fund? Moving then to Solid Waste. Again, this one operates somewhat similar, where you want to have operating income. You don't want to have an operating loss. And you'll see some years in the past, you've had some operating loss, and some years you've had some operating gains. In 2024, and I'll dive into this in depth, you'll see that there was a significant loss. And this loss was primarily due to how GASB requires the county to account for landfill costs. So under GASB 18, and there's DNR regulations and everything, they require you to ultimately when the landfill closes, you have to pay for all kinds of capital and various different projects to actually close it to meet DNR regulations. And then for the 40 years after the landfill close, you have to monitor it to make sure, you know, nothing's happening to the environment, a couple different things. So the way the accounting rules work is they have you expense that while the landfill's in operations. Because you don't want to have it all of a sudden you'd have an $8 million expense when you close the landfill because you wouldn't have revenues to offset it. So they basically that's why you end up with a big hit this year. You ended, every couple years, the state requires you to get an updated plan, an updated cost from the engineers on what that liability is going to be. And how much do they think when you actually close it 5 years down the line, 10 years down the line, how much do they think that's going to cost? Well, due to timing, you know, the higher inflation costs, since you've seen the last cost study, due to various different factors, those liability amounts and those projected estimates done by the engineer increased significantly compared to the last time you did the study. So because of that, you end up with one big year hit here. And that hit was $4 million. So if you would back that off, you would have had positive operating income of $600,000. Now it is something to be aware of. Again, the DNR has determined that you're sitting okay with what you've put aside for cash, and they know that the county has additional funds on hand to help cover it. But should be a one-time hit, unless all of a sudden you get another new study and some DNR regs change, where then you'd have to do more kind of thing. And basically the way that amount gets calculated is we take the estimated cost from the engineer times the percent of the landfill that's filled, and then that's what the liability amount is. And so the net difference in that amount from one year to the next is what gets shown as an expense. So that's why it shows that way. Again, it's not necessarily a cause for concern. Obviously, it's just a cause because that's what happened. You got the updated studies. Obviously, inflation costs have risen for everything. And it's just obviously something then to just take into consideration as the county is planning for its next 5 to 10 year plan, because obviously the landfill is set to close potentially within that time frame to, you know, have that funding mechanism. Because ultimately, when it closes, the engineers are estimating it's going to cost $5 million to pay for all the work needed to be done to close it. And then over 40 years, they're expecting it to cost you 3.8 to monitor it. So it's just something to be aware of. It's an accounting thing. And, you know, it is something we look at every year. And it's obviously something we just recommend that if you guys see something with your engineers that something's changing, have them update the cost. Maybe something changed, maybe it decreases. Any questions about that?
Mr. Chair, quick question on the $3.4 million loss. Is that then, how is that covered for, or what happens? Like, is there money transferred to balance that to zero from a different account, or what happens to that $3.4 million?
Over time, it is expected that the way the accounting rules are worded is that they expect that your user fees over time will contribute enough money to cover that by the time it closes. And if not, then the county has to determine how they're going to fund it, whether it's an advance from the general fund, or if it's taking out debt to fund that money at that time, or what you're going to do.
So there's nothing being charged to the taxpayer. It's just I'm trying to think of the account names. Accrual account, basically. We're just,
yeah, you're
we
setting
need
up
to
the
get-
liability
we need to make up that difference over time.
over time.
How much time do we have to do that
I
typically?
believe the landfill is set to close in 29, 27, 28, 29, something like that. And so you have some cash set aside to cover it, but the way the accounting rules are, we can't net that cash against the expense.
Fair enough. Thank you.
Supervisor Shelton?
Sorry, I'm trying to phrase the question. So basically, if we fill up the landfill tomorrow, you're saying we have an expense for the next 5 years, 10 years on that?
Yeah, so when, you know, the landfill operates as it does until basically you can't expand anymore and there's no space to put more stuff in. Then then the DNR, and I think even the EPA and everybody else is involved, where you have to, you know, put in gas wells and you have to basically physically cover it. And so that's part of these costs. And right now the engineers are saying that that's going to cost you $5.3 million. to do that whole covering and putting in the gas wells and doing all that stuff. And then after that, then you are legally responsible for 40 years to monitor what's going on at that site to make sure there's no seepage or different things going into the ground or just different things that's causing environmental impacts. And so every year after that, you're going to still have some expenses because you have to pay people to go out and do some tests on it.
Okay, and it's probably not a question for you, but it raises a huge concern for me because we charge other counties to fill up our landfill. But what you're telling me is even after we've taken those monies, that we're charging the same as our own county, that we still accrue a debt for another 40 years?
That's where the rates that you charge and interest income earned on your balances that you've been set aside are to be used to basically build those balances up so you have the money on hand. So even if you have $2 million in the bank right now set aside to help fund this stuff, the interest income that grows on that will help cover those costs when that happens. And interest income that builds every year will be used to help cover that. Other things are just as the landfill's open, you'd want to have user fees building to help cover these costs.
But if our landfill doesn't have 3 million right now to cover that, there's no interest to.
You have $2 million in the bank. You'd have to, some of it'll grow, some of it'll be more next year. If you have a positive operating income, that's going to contribute to that and increase it over. So you have enough time to get there. It's just then coming up with, because again, they build in this interest income factor, hoping that then you'll have it.
Hoping, but.
And honestly, user fees, that's where some of the money comes in. Is you ultimately, just like any enterprise fund, your user fees are supposed to be designed to help cover your operating costs, which includes putting this money aside for the long term.
Okay, thank you. I just need to ask that of the land.
Mhm.
Appreciate it.
Supervisor Dozel?
One last question. So when these new charges came out or accounting, when would that have happened? What kind of notice do they give us that, hey, this is changing? You need to
This standard has GASB 18 has been in effect since the 90s. So this
So-
rule has always been this way. It's based on what the actuarially determined study determines what your costs are going to be.
So were we under withholding in previous years or?
Not necessarily, the study gets updated every so many years. I don't remember exactly how many it is. It's every 7 or every 10 years. And so it gets updated based on what DNR regs are in place at that time for what would need to be done for closure and then care. And then just how much that costs at that time. So it's not like it's not that the county was doing anything wrong in prior years.
Mhm.
It's just once cell 6 was finished and once the updated study was done, which because obviously when the original costs were determined, you probably didn't have cell 6 in that cost part either. So once that's all get done, and then once the engineer does their estimates, they're seeing what it's costing other landfills nationwide or however they're gathering their data to be like, okay, well, it's costing this much to calculate. So it's just it's not that the county did anything wrong. It's just you got an updated report that said, okay, well, our first estimates from 10 years ago, they're now being more accurate because now they're being updated for all the different inflationary costs that we've had since then.
So did that $4 million change just happen in 2024
Because the updated study came in.
because of the closing of the previous cell?
Not necessarily the closing of the cell, but just having an updated study from the engineers.
Okay. Thank you.
Moving on, then I just want to briefly talk about some things to be aware of for 2025 and beyond. I don't want to take a whole lot of time. One of the next slides actually has a QR code to our website where you can scan that code and it'll take you to more information where you can read more articles on all this information. But starting off with the One Big Beautiful Bill Act, 2 things that will affect governments out of that bill. Premium pay on overtime. So this does actually go into effect for 2025 reporting for employees. What's different though is the W-2 form itself will not be amended. That form itself won't be amended. That's what we're hearing from the IRS right now. But the employer still has to calculate what that premium pay is and still give it to the employee so they can put it on their tax return in January or when the tax return, whenever they're filing their taxes. So we're here for questions if the county has any questions on that. Obviously still waiting for some guidance from the IRS on some of it as well, but that is what we do at this time. So I did want to let you know. And then the 1099 reporting threshold is increasing from $600 to 2,000. So that unfortunately it's a little unclear. It sounds like it's more that one you might have one more year before you can actually implement that one, but that's still changing. So that is a nice positive thing. A few less to have to go out. There's a couple new accounting standards that are upcoming. And so I'm going to talk about the one that has the biggest impact to the county, which is GASB 103. And so the big 100-page financial statement document, there's going to be some changes to it. And the first one is actually going to affect Highway Enterprise Fund and Solid Waste Enterprise Fund. They basically are adding some categories kind of thing. And so some of the items that are shown in your non-operating revenue section is going to have to be split out. And now they're going to be called subsidies. So those financial statements will look a little different, at least those pages. Then the budget to actual statements are going to get moved further back in the report. And then there's also going to be required footnotes that explain budget amendments if you do have them. So that's another change that'll affect the county's financial statements for that. And then the MD&A pages at the beginning that Kyle puts together, those, they basically revamped that entire thing and want you to start from scratch. They've eliminated some things because they thought there was duplication, and then other things they've decided are they want to expand commentary on it. So that goes into effect for 2026 reporting. So we will be spending a little bit more time on the financial statements and working with the county to make sure the revenues get in those right sections and we get everything for the footnotes that we need. So again, we still have one more year before it's going to happen, but again, it's going to be some significant changes to the financial statements from that perspective. Then uniform guidance. So uniform guidance is the federal grant rules you have to follow. And so they have just starting as of 10/1/25 or 10/1/24, sorry. So then basically impacting the county's fiscal year 25. They've increased certain thresholds from 750,000 to $1 million. And then they've updated certain things with indirect costs if you do claim indirect costs. And then the other item that I did want to point out here, because obviously cybersecurity is significant to everybody, is they added a clause about making sure that the county has cybersecurity measures in place to protect data. So you're going to want to take some time to look at your grant programs and understand what kind of data is gathered and retained to make sure that there's cybersecurity protocols in place to, protect from hacks or different other ways that maybe the county is being a target of. And again, we always just recommend overall, make sure you're always keeping up on that cybersecurity aspect of it, because the county has lots of data that not good actors want to get at. So, and again, if there's any interest in that, we can also get the county in touch with our cybersecurity team, and we can have some conversations about different things that maybe we could help or just different things to think about. And with that, and again, here's that QR code. If you scan it, it should take you to our website to be able to get information on different articles or different things. If it doesn't work, let me know and I will make sure you guys get the link to our main article page. And with that, I will open it up for questions.
Okay, looks like none. Thank you very
Sounds
much for your time.
Thank you. Have a good night.
Okay, next we'll have the budget presentation. Finance Director will handle that.
All right, so first we'll start off with the statement that the budget is balanced. And then also just some general housekeeping. If you could please make notes of your questions and we'll field questions at the end of the presentation. If you need me to go back to a particular slide to help you with your question, I'll gladly do so. So first, we're going to look at what the budget timeline looks like. In June, under the guidance of the county administrator, the budget direction is set. Typically, this is directing departments to maintain their levy ask at no increase and to set what the cost of living adjustment will be. This year, the cost of living adjustment is 2.4% to align with the April Midwest Consumer Price Index. Retirement rates are set by the state and insurance rates are set by our insurance provider. The overall budget assumptions will be discussed later on in this presentation. Department heads are also given budget instructions, packets, and supplemental documents to assist in developing their budgets. During July and August, departments are asked to complete their requests. This is just putting in their ask for their budget. After department heads have their numbers ready to be reviewed, the departmental asks are reviewed by their respective committees. In September, we hold meetings with each department head, the county administrator, finance director, and human resources manager. These meetings are to evaluate the departmental ask for their budget and to determine a methodology for budgeting expenses and revenues. We'll typically look at using a historical 5-year average of actual expenses and revenues. By October, it brings us to where we are now. We're giving a budget presentation to highlight the major changes in the 2026 budget. First, the presentation is given to the Administrative and Finance Committee and then to the County Board. At the November County Board meeting, we then adopt the budget. Along with budget adoption, we also have to complete apportionment worksheets. Apportionment worksheets allocate levy across all the municipalities based on their respective share of equalized value. So the apportionment worksheets are due November 15th every year, and typically the county board meetings held on the third Tuesday of every month. However, due to the requirements of filing the apportionment worksheets and the county board rules regarding the annual meeting, we end up having the November board meeting a week early to allow for timely filing of the apportionment worksheets. So this year, the county board meeting to adopt the budget will be held Tuesday, November 11th. So tax levy. The county tax levy, excluding adjustments for the library, local road and bridge aid, and debt service levy, is $19,999,566, which is an increase close to $590,000, primarily driven by net new construction. The library levy is $561,924, which is a decrease of $1,526, mainly due to a change in staff benefit elections. As we have a county library, municipalities with their own public libraries are exempt from the libraries portion of the levy. Those municipalities are the town of Rome and the city of Wisconsin Dells. The library levy is exempt from levy limit laws. And the local road and bridge aid levy is $172,578, which is a decrease of just under $228,000. This levy is derived from the petitions received from towns for the construction or repair of bridges or culverts. Sometimes the projects come in under what the town petitioned the county for. In those instances, the fund balance is applied for future petitions. In other cases, the town does not complete the project in the anticipated year, and that fund balance is applied forward. The county will have 3 petitions, one from the town of Quincy for roughly $20,000, and 2 from the town of Preston for a total of $155,259. So if you recall last year, this levy was for 4 petitions. There are 2 towns that had not started their projects yet, so the fund balance is being applied to fund those projects in 2026, which is why there's a net effect on the levy of roughly $172,000. The cities of Wisconsin Dells and Adams and the Village of Friendship are exempt from the local road and bridge aid levy. And the local road and bridge aid levy is also exempt from levy limit laws. Debt service is levied to match our principal and interest payments in 2026. And this levy is exempt from levy limit laws as well. So this equates to a countywide mill rate of roughly $3.88 per $1,000 of valuation, which is a decrease of around 73 cents per $1,000 of valuation from last year. The mill rate will fluctuate based on the municipality. So what the mill rate means is that for every $1,000 of valuation, the county will receive $3.88. So someone with a $1,000 home will have a county tax portion of about $388. So these are just the county taxes only. There are other taxing entities on the tax bill, such as local school district, technical college, lake districts, and the town, village, or city. We're going to cover historical mill rates later on. So the county's net new construction was 2.94%. The net new construction is essentially how many new structures were put on properties to add value. This is a number provided by the State Department of Revenue. This number is important as it's how much we're legally allowed to levy in the future year. As stated earlier, there are items that are exempt from the amount we can levy, which would be the library levy, debt service levy, and local road and bridge aid levy. So while there may be a dollar amount increase in the tax levy, that doesn't mean that the mill rate will increase. The mill rate's actually decreasing by about 73 cents. So to put that in perspective, the mill rate was at its highest in the 2013 tax year at $7.66. The mill rate is going to continue to decrease while the dollar amount of levy increases due to the large growth of equalized value. So long as the county experiences positive growth, the mill rate will continue to decrease. So the county's total levy will be $21,138,418, which is an overall increase of $355,839, which is the lowest dollar increase in the last 4 years. All right, so this slide is the detail from the state for the net new construction for all municipalities in the county. You can see the net new construction down here was rounded up to 2.94%. This is the average across all municipalities. The towns of Colburn, Del Prairie, Newchester, and Rome are the only municipalities to exceed the county-wide average. All right, and then I'm just going to go over some graphs relating to the levy. So this first graph here shows the equalized value going back to 2008. You can see the value plateaued between 2008 and 2009 and then had a steady decline up until 2013. From there, you can see a steady incline up until 2022 and 2023, where we had rather large increases. Something to point out, 2013, that was the year that we had the highest mill rate. And this next graph is going to show the mill rate. So the mill rate is essentially the inverse of the equalized value. You can see where the equalized value had its valley in 2013, the mill rate had its peak. So the mill rate's been steadily declining since 2013, with its largest decrease being for the 2023 tax bills payable in 2024. And then finally, this last graph shows the amount levied for the 2026 budget. So while there's an increase in levy, there isn't as sharp of fluctuations like you see in the prior graphs. From 24 to 25, you'll see a rather large increase. This increase was mainly due to $400,000 for local road and bridge aid levy. That was in the 25 budget, and that is driven by petitions from the towns. The burden of the tax levy will increase shifts to properties that made improvements in the year, which then increases their property value. All right, and then this here is a chart showing the top 3 departments dependent on the tax levy over the last 6 years for their operations. The Sheriff's Department is the blue line on top and has continued to increase year over year, even with the additional funding from the state for county and municipal aid in 2024 of close to $400,000. The sheriff's levy has increased just over $1.3 million during this time frame. The Highway Department is the green line right down here, and this department has remained relatively flat with minimal changes in their levy. And then Health and Human Services is the orange line here. They've had a steady increase from 21 to 26 of close to $1.5 million with the intent to build up their reserves. The reserves have now reached a point where they can use those reserves for capital projects not identified within the maintenance department budget, such as the roof at Practical Sense. In 2026 budget, they're increasing by roughly $230,000, primarily due to wages and benefits. All right, so what is in the budget? The salary schedule has been aged by the cost of living adjustment of 2.4%. This means all the wages from the schedule will be increased by 2.4%. In addition to this, respective employees will receive their appropriate step increases. This adjustment is in line with the Midwest Consumer Price Index measurement month of April 2025. So at this point, since we're talking about wages, I'm going to pause as there are some new positions in the budget. This is a new process that we're going to do as part of the budget presentation, so departments can justify their positions to the county board. So I'm going to turn it over to Kelly Olson, Health and Human Services Director, to discuss a new position added in her budget. Following Kelly will be Dustin Grant, Planning and Zoning Director, discussing his position moving from part-time to full-time. And last will be Bethany Spa, the medical examiner, to justify adding a part-time position. After each department head presents their justification, we'll allow time for questions and answers on their requested positions.
Thank you, Kyle. Good evening, everyone. Health and Human Services is requesting the addition of a full-time case manager position at Practical Sense. As a reminder, Practical Sense functions as both a retail operation and a job training site. It provides pre-vocational services and job-related skill development in a structured and supportive environment. Since its inception, Practical Sense has been designed to operate as a financially self-sustaining program, independent of county tax levy. Revenue is generated through daily sales and billable programming associated with client services. The proposed case manager position would require a bachelor's degree and would serve as a liaison between the store manager and the training specialist. While the staffing structure has remained unchanged for several years, demand for services has increased, and both programming and training needs have grown more complex. Following our family care transition in 2018, the department shifted to Comprehensive Community Services, or CCS model, to secure alternative funding to supplement decreasing pre-vocational and supported employment services. While this program provides improved reimbursement and critical funding for sustainability, it also introduces greater staffing demands, requiring more intensive supervision of trainees. At the same time, the number of volunteers and community service participants has declined, leading to workforce shortages, heavy reliance on on-call staff, and backlogs in processing donations. Adding this case manager position would help relieve current staff of competing responsibilities between trainee needs and store responsibilities, and it would support the program's ability to meet both service delivery and program requirements. Core responsibilities would include providing direct services and one-to-one support to trainees, completing documentation and case notes, attending interdisciplinary meetings, and conducting person-centered assessments to develop individualized vocational goals. Funding for this position would come through program revenue, primarily from Medicaid billing. This position would have primary responsibility for our CCS clients, and the billable revenue would offset the full cost of the position, including wage and fringe benefits. This position is cost neutral, meaning there would be no tax levy required to cover the cost of this position, as well as additional administrative costs. Thank you for your time and consideration.
Okay. Questions for Health and Human Service? Supervisor Dole?
I might have missed it. I apologize. Did you state what the salary was for this position?
No.
Is that information available or?
Go ahead.
Well, let me flip through some pages real quick. Maybe not real quick. I can pull that up when somebody else is speaking, but we're assuming it's at the regular case management rate of
Roughly.
the other positions.
Roughly.
I believe it was around 95,000 with wage and fringe.
Thank you.
Okay. Oh, it'll be in the presentation later, he said. Right?
Yeah.
Okay. Director Grant, are you next or?
Thank you. The request that the Planning and Zoning Department has for this year is to move a half-time code enforcement officer to a full-time position. On the chart on the screen, the red line mainly is the net new construction, which we were just talking about. You can see it is steadily increasing. The middle blue dot at the bottom, that's kind of just major events. That was when we signed the contract with the town of Quincy to become their zoning administrator, which did substantially increase our workload. It did also provide the funding for the current halftime position. As you can see, not necessarily here, but it is in the folder available for you. The number of permits has gone up. Last year was 1,540 total permits that came out of our office. And this year we're on pace to do closer to 1,650. The key number there is this year already we've done almost 400 zoning permits. Once we hired the halftime position, one of the policies I implemented is that we do a pre-site visit before we would issue any permits. That halftime position is responsible for almost all of those. And so that's 400 site visits he's doing on a regular basis on top of any violations that he is also pursuing. What we're running into is that the number of permits is on a steady increase, and the number of violations isn't changing, or what he's pursuing isn't changing. He just doesn't have the time to pursue those violations as diligently as we should be. And that goes for all of us, but by moving this to a full-time position, it would provide for better customer service in getting a turnaround quicker for permits, getting out the door, and also timely resolution on various violations. The numbers are on the screen, but that's the majority of it. The other part of it is we will be working in tandem with the treasurer's office and the county clerk to ensure compliance with dog license registrations starting next year, or starting on the first of the year. And that will fall mainly on that halftime moving to a full-time position's shoulders. I thank you for your.
Okay, Supervisor McLaughlin.
Thank you. My main question is, since the department chose to give up building inspections and farm that out, it seems to me that should have freed up a ton of time for somebody. So I guess I'm a little skeptical of why you need this when all that workload was given away. And also the revenue that came into the county was given away along with it.
Supervisor Dozel.
Two questions. Cost associated with the increase in 20 hours, I guess.
I'll defer to Kyle on that one.
And then two, kind of a statement, kind of along the lines of what Supervisor McLaughlin's saying, is the costs in this department continue to increase. About 300,000, if I remember, in the last few years. And the revenue's not keeping pace. So questioning whether or not this addition is a good spend.
Go ahead, Finance Director.
Mr. Chair. So the cost for the position is roughly $56,000. And yep.
That's just the additional 20, or is that the total position?
That's the additional.
20.
It's going from halftime to full-time.
So is it the person making 112,000 then?
There's benefits included.
Okay. I'm not trying to be difficult. I'm just trying to understand. So am I understanding this correctly? The additional 20 hours is going to cost the county $56,000, an additional 56,000.
Yes.
Thank you.
Okay. Ms. Spall.
Good evening, everyone. So my name's Bethany. I'm the medical examiner for the county. So currently at present, all positions within the medical examiner's office are structured as on-call only, with the exception of my position, which also serves in an on-call capacity, but I'm salaried. Overall, establishing this part-time position is a proactive, cost-effective solution that reduces on-call wage expenses, hourly wage expenses for multiple deputies, and enhances operational stability and safeguards the continuity and integrity of the essential public service. On-call only positions do not provide the financial stability necessary to recruit or retain qualified personnel. As a result, the office faces continued staffing shortages. These shortages have placed timely scene response, statutory reporting, and investigative follow-up work at risk, all of which are required under Wisconsin State Statute 979. Our office staffing model does not reflect what is common in comparable counties. This role would serve as both an operational enhancement and a continuity of operations and continuity of government protective measure. The proposed part-time position would include an on-call requirement every week accompanied by the 20 hours of office-based responsibilities. These office hours may include casework generated during the on-call shifts, as well as additional duties or projects as assigned. The medical examiner would also maintain an on-call schedule every week in addition to my salaried 40-hour work week to ensure adequate coverage and allow myself to attend mandatory meetings, trainings, professional obligations. I would utilize an on-call deputy to cover any remaining hours. During slower caseload periods, staff can focus on vital administrative and improvement work, including addressing case backlogs, verifying data quality for state reporting, updating protocols and procedures, conducting inventory and supply checks, cross-training, continuing education, community outreach, and advancing digital case conversion efforts.
Questions for the medical examiner? Supervisor Dozel?
Same as all the rest. Same as all the other ones. What's the cost? We didn't get the presentation.
He's looking it up.
Mr. Chair,
Yes.
roughly $30,000.
If I could please just add one more thing to that.
Go right ahead.
So that $30,000 isn't necessarily an addition. So I have multiple on-call staff members right now. Those on-call hours for those multiple deputies would be eliminated by this part-time position. So between myself and this part-time position, we would take almost all of the call, if not all of it, including that hourly wage.
Fair enough. I just, for consistency, asked the same question of everybody. Didn't want to treat anyone different. Mr. Chair, one question.
Yes.
Was there any other departments that requested additional headcount?
Mr. Chair, there were two.
And what were the deciding factors on why they're not up here?
Mr. Chair.
Yes.
We met with the departments that were requesting the added positions, and at this time we weren't able to fit them in the budget, and there was additional factors with justification.
Mr. Chair.
Yes.
What were some of the, I guess, we're looking at this, right? So again, trying to be fair and consistent. There's two other departments that asked for additional headcount. Why were these three selected and the other two were not?
Mr. Chair.
Yes.
So one position is set by resolution, limiting the number of people in that department. And the other is just one that I had said that perhaps during the year, we have to have time to do a justification for the position. And we didn't feel like at the time we had adequate justification at the time of setting the budget. It was kind of sprung on us. So during the year of 26, that's something we're going to be looking into.
So we did wage surveys or not wage studies to determine the feasibility of these, like all the other departments? For the three that got accepted or approved?
Mr. Chair,
Yes.
you're hearing the justification on the floor tonight. So if you have questions about any of that, this is your opportunity. Again, this is a new process. I figured open it up, transparent,
Oh, I
and
like
have
it.
board members. So as far as the study, the other one probably will take more of an in-depth time study. The other department that we felt like we didn't have
But
good enough
if,
data.
so what I don't understand about that one in particular is that everyone else was given the opportunity to justify this, and this is their wage study. The other group, that's what she said. Unless I misunderstood, I believe the county manager stated that this is the wage study. This is the justification. That's what this is up here. The last person or the last group that you were just speaking about said that we didn't have time to do the wage study, so that's why they didn't make it to this presentation. Am I misunderstanding that, or?
Mr. Chair?
Yes.
These three are in the budget in 2026 is why they're presenting now to justify. They've already gone through their initial step and we have met with them multiple times about this. And this is a conversation we've had, not just once, but many times over the years, especially with planning and zoning. This is a discussion we've had ongoing for a while. And then there was a recent event with the animal control. So a lot of things opened up that position started to make sense. He was one that was told no almost every year with his position. Okay. So this year, now we have enough to justify the position. So there is a lot of work that goes into it. The other department, it was kind of like it was sprung on us during the budget process. So we didn't really have a lot of time. There weren't previous discussions about needing additional staff. And again, the other one was set by resolution.
Supervisor McGough.
Thank you. In the interest of transparency, if it was, was told which the two departments those were, I missed it. And if it
No,
wasn't
she
told-
didn't say. She didn't say.
Well, okay, I'd like to know. I think everybody else in the room probably like to know too.
Supervisor Pozdowski.
Thank you, Mr. Chair. There have been concerns among citizens that yeah, can we call point of order? We don't need these, okay? Thank you. All right, I'm gonna continue, thank you. So there's been expressed concern among our citizens that certain department heads weren't granted additional funding due to unhealthy, unprofessional feelings or emotions among some of our leaders. Now, what do we say to this? Do we have an explanation for this?
For what?
Unhealthy emotions have played a part in the decision not to grant additional funding.
For what?
Well, certain department heads that we're
What-
discussing here now.
What department? Are you talking about the Treasury Department? Because we can say that because as it is, this body by resolution said there will be 2 full-time people there, and that's what is budgeted.
I'm gonna say this. Unhealthy emotions or feelings should play no part in any decision. And the people, the citizens that pay their taxes feel this way and think this is not professional conduct. And our taxpayers deserve better than this, okay?
Thank you
So,
for your comment.
thank you.
Okay, Supervisor McLaughlin.
Okay, thank you. I think the puzzle's coming together damn slow, but maybe, so I'm understanding, and somebody correct me if I'm wrong, one of those two positions that doesn't qualify was the treasurer's department?
Yes.
What's the other one?
Mr. Chair?
I
I mean, we could share that.
I'll go ahead.
The DA's office.
And there were additional monies funded for on-call personnel in the treasurer's department, as discussed in the admin and finance department.
Mr. Chair, I'd just like to call out that almost every department's justification for not, or for wanting to add a person was because the on-call pool doesn't work.
Okay. We'll move on then. So go ahead, Kyle.
So moving on, the Wisconsin retirement system rates increased by 1/4% to 7.2% for general county employees and elected officials. The rates decreased by 1/4% to 14.7% for protective employees. You can see the rates shown here directly from the WRS website. On top is the general county employees, and down here is protective county employees. Our health insurance is increasing by 9.5%. So the impact for an employee on the family plan is $378.72 per year. For an employee on the single plan, the increase is $143.04 per year. We have a planned reduction of the general fund unassigned fund balance in the budget. The general fund unassigned fund balance is approximately $8.7 million, as you just heard, as of 12/31/24. The Governmental Financial Officers Association, or GFOA, recommends a minimum unassigned fund balance of approximately 2 months of expenditures, or around 16%. Our fiscal policies state an unassigned fund balance of 15 to 20%, or around $3 to $4 million is the minimum required. We currently practice getting the unassigned fund balance to around 30%, or about $5.8 million. Capital projects are funded with excess reserves in the general fund and debt service fund. All right, fund balance. So this first graph here just shows the general fund expenditures from 2013 to 2024. General fund expenditures are what we use as a measurement against our fund balance. This graph shows the general fund unassigned fund balance over time. The horizontal axis is for the year ending. Below the blue line represents the dollar amount compared to the red area of the total general fund expenditures. For the year ending 2024, you can see there's approximately $8.7 million in the unassigned fund balance. This increase was primarily attributed to favorable interest income and staff vacancies. From 2018 to 2019, there was a rather large decrease in the unassigned fund balance. This is due to a transfer to the building project fund in the amount of $5.4 million. Then looking at the general fund expenditures, you can see there was a fairly significant decrease from 2017 to 2018. In 2018, we created capital funds and shifted those general fund expenditures to those capital funds. Now we'll move on to the percentage of the unassigned fund balance. So you can see again the sharp decline from 2018 to 2019 due to the transfer to the building fund. The fund balance has been climbing steadily since 2019. The minimum required fund balance was 18% in 2013 and 2014 and 15% thereafter. So this budget will be spending down the unassigned fund balance by making transfers to various capital project funds. This should bring the fund balance to around 30% of general fund expenditures if all else remains constant. Now we're just going to overlay what our policy requirement is. You can see the red shaded area is what our policy requirement is during that time frame. All right, this is just a summary of wages and benefits. So in 2025, Adams County had budgeted $24,148,799.75 in wages and benefits. And in the 2026 budget, we have $24,832,919.27. So this is an increase of roughly $684,000. First, we're going to cover major changes in the general fund departments. So the sheriff's department, they budgeted $6.8 million in wages and benefits in 2025. In 2026, their budgeted wages and benefits has increased to roughly $7 million, so an increase of close to $200,000. The Health and Human Services Fund budgeted roughly $7 million in wages and benefits in 2025. The 2026 budget is roughly $7.3 million, or an increase of close to $317,000. Roughly $93,000 of this increase is for budgeting a case manager position at Practical Sense. Between Health and Human Services and the Sheriff's Office, the total increase is roughly $517,000, which represents roughly 75% of the wage and benefit increase. There were no other departments that saw an increase in wages and benefit, or sorry, there were other departments that saw an increase in wages and benefits and those that saw a decrease in wages and benefits. So the reason for some of the decreases is due to change in benefits moving from family to single or family to no insurance. The Planning and Zoning Department, as we discussed earlier, is seeing an increase as we're budgeting for a code enforcement officer position from part-time to full-time. In 2025, the wages and benefits were roughly $489,000, and in 2026, the wage and benefits are roughly $564,000, about a $75,000 increase, of which $56,000 is due to the position changing from part-time to full-time. The Treasurer's Department saw a decrease as we're budgeting for 2 deputies in 2025. However, action was taken in the form of a resolution by the county board to reduce the office down to 1 deputy, and that is taking effect effectively in 2026. So in 25, the wages and benefits were roughly $263,000. And in 26, the wage and benefits are roughly $161,000, or around a $102,000 decrease. Next, we're going to cover capital projects by department. We're just going to go over the major projects planned for 2026. For any planned projects beyond the next year, please refer to the capital project worksheets that are going to be located towards the back of the budget book when it's available. Capital items are the larger costs that fall outside the normal maintenance of facilities and grounds. The total spend across the county is roughly $5 million. The Highway Department has a different method for capital budgeting, so it will not show on the countywide summary. This list that I'm presenting is not all inclusive, but highlights some of the major planned projects for next year. So with the Medical Examiner Department, we plan to replace the department's van. For the County Clerk's Department, we plan to provide a one-time infusion of $250,000 towards the eventual replacement of the voting machines used by the towns. For the Maintenance Department, we plan to replace the parking lot on the northeast corner of Adams and 3rd Streets. This is being bid out through the building project, but will be paid for by the Maintenance Department's capital budget, as it was not originally identified in the building project. The Sheriff's Department will be replacing 10 defibrillators, 34 tasers, and replacing the recreational officer truck and 4 patrol vehicles. Emergency Management will be replacing 3 mobile radios and continuing with radio channel upgrades. The IT Department will be replacing a server, and the airport will begin the phases of reconstructing the taxiway and taxi lanes. This project was initially budgeted for in 2025. However, due to questions related to funding from the Bureau of Aeronautics, it has been delayed. Health and Human Services will be repairing or replacing the roof at Practical Sense. Parks will be purchasing a mower, replacing both bobcats and a tool cat, replacing a UTV leaf vacuum and a truck, and constructing a shop building at Castle Rock Park. The Parks Department receives their funding for capital projects from their excess operating income over expenses and from the debt service fund balance. We do not budget sales tax specifically for the parks capital. Land and Water will have major repairs done on the Cottonville Dam. Solid Waste will be replacing a cable truck and a loader truck. And a loader. They'll also be making some improvements to the small vehicle area near the scale. And they're planning to complete the vertical expansion in 26 and install an additional gas system in the landfill. Highway will be reconstructing a section of County Highway Z from Duck Creek Bridge to Evergreen Avenue, reconditioning County Highway D from State Highway 13 to 10th Avenue, and they'll be seal coating nearly 11 miles of County Highway O. And then the building project will focus on opening up entrance D and making major parking lot improvements. All right, and then next we're going to summarize how the budget is meeting strategic goals of the county. Attracting talent is the first category, and the budget will accomplish this goal through increasing wages to align with the Midwest Consumer Price Index, improving roads through highway projects, budget and fiscal stewardship, So we have a balanced budget and healthy fund balances that are being used for capital projects rather than issuing debt for those capital projects. Additionally, we're seeing the lowest dollar increase in the tax levy in around 4 years. Natural resources, by repairing the Cottonville Dam, we're maintaining our current natural resources. Safeguarding assets and community are grouped together due to the building project. And through the building project, we'll be improving access to the public while continuing to safeguard assets by having secure areas of the facility. So this first chart is just showing where all the revenue sources are coming from that are in the countywide 2026 budget. So this is all the different funds. So general fund, highway, health and human services, solid waste, et cetera. You can see that the property tax levy accounts for the greatest share of funding sources at just over 31%. The next highest revenue source is the category of intergovernmental revenues at just under 16%. This is our anticipated grant revenues for 2026. And this is followed by fund balance applied at 14.5%, right up here. Fund balance applied is a planned spend down of fund balance for capital projects. And then next is public charges for services at around 14%. These are fees charged to the public for services rendered by the county. And then this is followed by intergovernmental charges, which are charges for other governments for items like road plowing and garbage collection at just under 13%. Similar to the previous chart, this one shows the expenditure categories. The largest spending category is in public works, which is roughly 25%. This is due mainly to the larger budget with highway and solid waste. So solid waste falls into this category along with some other smaller spending categories such as the airport. The next largest category is health and human services at just over 21%. This category is not only health and human services department, but also includes the veteran service office. And capital outlays are around 15%. The capital budget worksheets provide the detail for this expenditure category. Public safety is around 13% and general government's around 11%. These areas receive very little outside funding and are very dependent on tax levy. Later on, we'll be showing each department's levy dependency. So this bar graph is showing a comparison of 2025's countywide budgeted revenues versus 2026. On the left side is the dollar amount. On the bottom shows what category each bar represents. So you can see most revenue categories are relatively level, aside from fund balance applied down at the end. This revenue source is just a spend down of fund balance on capital items, which you'll see on the next graph. So this last one shows our comparison of countywide expenditures from 25 to 26. So you're going to see a large decrease in public works here, mainly related to highway projects from 25 being deferred to 26 and 27. And then you'll see the increase in capital outlays over here, which corresponds to the increase in fund balance on the previous slide. And circling back to the overall property tax levy, if you recall, the property tax levy was roughly 31% of total revenues, and of the total property tax levy, around 61% is in the general fund, followed by around 17% with health and human services and about 16% with the highway department. So as the general fund is the largest category for property tax levy distribution, we further break down which departments in the general fund the levy is used for. And you can see that a majority of the tax levy goes to the sheriff's department at around 53%. You'll see that not all these slices are labeled with percentages and amounts. Typically, this is where I'm going to end the presentation, but we also had a little discussion that we wanted to have on capital budgets as well. Do we want to do questions before that on this or go into capital budgets?
Why don't you go ahead and do this because capital is part of that, so go ahead.
All right. So, oops, trying to get it dragged over there. All right. So this is just kind of a refresher on the capital budgets. So up at all of the departments are going to have this county-wide capital project summary spreadsheet, which lists the total expenditures by category: equipment, fleet, parks, public facilities, road and bridge, and technology, and the year in which those expenditures are planned to happen. So all of the departments that have capital items will have a sheet like this. just summarizing their purchases. The summarization comes from individual spreadsheets that they complete for all of their capital assets. Then they're gonna, on these summary sheets, it's also gonna list the total available funding by source, where it's coming from, to fund those capital projects. So you're gonna see the countywide summary is just over $8 million in funding source and spending about $5 million on capital projects. So because this is actually one of the smallest departments, I'm just gonna kind of go over the medical examiners. They just have two different capital assets. So you can see this is the summary page for their capital assets. They plan to spend $55,000 next year on a vehicle. Where that's coming from is general fund balance applied and capital fund balance applied. So the funding source exceeds the capital purchase because they have two capital worksheets. They have the vehicle and then they have a cot. The cot receives $2,500 in funding. So you're gonna see on the vehicle sheet, $55,000 spend. Of that is coming, $7,900 is coming from the general fund balance, and then the rest is coming from their capital fund balance. Now, what happens if we have an asset that we aren't making a purchase for the next 5 years? Well, we're continuing to set aside money every single year for that capital asset. And something that we started doing this year with the capital projects is tying those project numbers up here with project codes in our accounting system. So they're gonna be tied to the revenue and the expense. You're gonna see a project code that's gonna say COT. You're gonna see a project code that says medical examiner vehicle for their budget in their capital. Within that, that's gonna help better track how much we've actually set aside for each individual asset rather than lumping it all together and saying they have X amount of dollars available for all these assets, but we don't know where it goes. So we're gonna know where all of the money is allocated for. So this was kind of an impromptu part of the presentation. So, you know, at this point, I guess we'll take questions.
Questions? Supervisor Dozel?
Alrighty. Kyle, I apologize. One recommendation I would make on this though is if you put page numbers on the presentation going forward, it'd be easier to know exactly what I'm talking about and reference back, so.
Yep.
On the tax levy overview, I believe that's the right slide. It says that we're increasing the tax 590K, so we're actually collecting more in taxes from the citizens of Adams County this year than last year. Is that correct?
Mr. Chair, that's correct.
Thank you. On the levy history, major departments, do you want me to just go through the list or do you want me to give everybody else a chance to do an order?
Go right ahead.
Mr. Chair.
No, go right ahead.
Tax levy overview. Hang on one second, I can't find my own spot.
Supervisor Shelton?
Yeah, I'm just gonna go back to the question I was asked in the beginning, and this is a lot of information that you threw at us. And why wasn't this presented to us available? Because I have been checking on this line since like last week. It's too much to go over and to generate a intelligent question with as much information has been thrown at us. So I don't think that's in a fair position to ask us to sit there and go over roughly, what is it, 36 or $67 million when we haven't had time to look at it.
Mhm.
And the next month you're going to ask us to approve it.
And you should have time to look at it between now and then, and Kyle is willing to sit down and talk with you about it and ask questions. And I think Connie has called every supervisor to find out if you want to schedule some time to sit down with the finance director and ask
And
questions.
I do have my meeting scheduled.
Okay.
But at the same time, it comes into a fairness now because it's also a presentation to the public on these numbers and all that for them to generate questions. I don't think the timeline, even asking for this 3 days ahead of this meeting is too much to ask, especially if you had it in the admin and finance meeting. And then I also know that I'm still relatively new to the board, you know, over 2 years. The whole process to me is convoluted. You know, you sit on a committee, you go in there, you make recommendations, and then the changes go, and then you go into another and you make recommendations, but there's no real discussion even when you sit on the committee on these funds. It kind of feels like admin and finance kind of runs it, which is, I guess, the title. I just want to just express that if we have information available, there's no reason that we wait to share it. Thank you. Sure.
Mr. Chair, along those same lines, you know, I believe at the bottom of this presentation, it says that the budget books will be provided to us by the 5th of November. So what are we waiting for? I mean, if we have all this information, why won't we get that before the 5th of November?
Well, and Kyle has said hopefully he can get it out before the 5th.
Well, okay, but is that the 4th or is that the 20th of this month? I mean, just roughly, Kyle, and I'm sorry, I don't mean to put you on the spot. How many pages is the budget book?
Mr. Chair, I don't know how many pages the budget book is. Last year it was like 450 something pages. I'm currently working on it and getting it all put together, but I do like to try to go through everything, double check everything. So I'm hoping, yeah, definitely before November 5th that we can get it out.
And when's that next meeting where it gets approved?
The 11th.
11th. So we get 6 days. So just to add on to what Supervisor Shelton is talking about, like it's 400, it's probably at least 400 pages. Is that fair, Kyle?
Mm-hmm.
So that's a lot of data to go through. Plus we all have other things that we're doing in life. So it'd be nice if we could work on getting that a little bit faster than the 5th of November. So that wasn't on my list of questions. So if you'd like me to continue, I can.
Mr. Chair.
Supervisor Dozal did have other questions and he did have the floor.
Okay.
So go ahead, Supervisor Dozal.
Kyle, during part of your presentation, it's not written on the slides, but you talked about it into the levy history, major departments. And you said that the sheriff's department received roughly, or I forget what you said exactly, but basically spent about $400,000 last year, more or something along those lines. Their budget increased by that. But didn't we go back and take their shared services, an equal amount of the shared services check that they received back out of their budget? So it was like 346,000 was the shared services check that they got. And then we went back after the fact and took that money back out
Mr. Chair.
of their budget.
Yeah, no, it was the other way around, the way that we had been interpreting the maintenance of effort allocation from the state for the shared revenues. We put it under general government, but I believe it was Supervisor Krug at the time that had pointed out that the legislature had intended for that to be for public safety. So we had put it over to the sheriff's department. So the sheriff's department is receiving the state shared revenues within their budget.
Okay, thank you. The fund balance overview. Come on. Could you explain a little bit on here? So it says unassigned fund balances in the blue. The fiscal policy requirement is in red. So we continue to grow above what our policy requires in more than double what we require. Is that fair? Or am I misunderstanding this? That's fair. Okay. Is there a reason for that? Like, so we got the unassigned fund balance. I know we have to have money for closing and unplanned for expenses and things along those. Understand all that. But at what point do we not increase taxes and, give something back to the taxpayer? Because we keep growing our balance and we keep taking more from the taxpayer and we're not even spending it. So when do we give some of it back? Or maybe just don't increase it?
Well, and I think as the finance director mentioned, hopefully with this budget, it'll go down to about 30%. The general fund balance unassigned should go down to about 30%.
But that's because we're gonna spend it on projects, right?
Right, projects and capital projects um, down at the counties association meeting, I know a couple of the supervisors and myself were in the meeting and they were talking about the general fund and they recommend 30% in the general fund roughly, just for the rainy day when something bad happens and the economy takes a downturn. So, I think, our policy says it's only 18% or 17.5% right now. We're probably a little lean on that. If Amber was here, they recommend anywhere from 25 to 30%.
Fair enough, but we're still 12% above that.
Right, but with this budget, it should be coming down to 30%, he mentioned.
Okay. So the concern that I have with that, then, if I skip ahead just a little bit, is how we're spending the money. And this was a later question, so I've got on the capital line. And again, everybody thinks when I ask a question, I'm attacking them. I'm just asking a question. Okay, so don't want the Parks Department mad at me because I'm asking a question about their area. But when I think about how we purchase things in this county, so we did this last year with snow trucks or pickup trucks and snow plows. We went and bought the biggest trucks and the biggest plows to back up the service that we pay to remove the snow. And our focus was on the resale value of those vehicles with that equipment. Now we've got Bobcats in the park, 3 of them, if I remember correctly from a previous conversation, that we replace annually. I don't know anybody or any company that replaces their equipment every year to save on maintenance and repairs. We got a bunch of business people in here. So if I'm crazy and you guys budget that way, let me know. But I don't know. I've got lots of friends that are farmers and things like that. And I see them driving the same tractors year after year after year. I don't see them going buying new ones every year so that they don't have to pay the service guy to come out and fix it for them. How do we talk to the taxpayers and say that this is good decision making? I'm not saying that they don't need 3 Bobcats, but replacing them every year, that's where I'm struggling with it.
Mr. Chair. Yeah, so the depreciation on the Bobcats, the annual depreciation is over $5,000 on the Bobcats. So our replacement cost for those is actually less than the amount that we're depreciating. We have roughly a 10-year useful life on those Bobcats.
But so there's a 10-year useful life, but we replace them every year. I have a hard time justifying that to the taxpayers.
We had that discussion in the committee. I mean, right, that discussion came up. We had that in the committee that the replacement cost is a certain amount, right?
4,500.
Roughly 4,500. So, and Supervisor Bork, did you want to answer that or help?
I was gonna try to help explain that when that equipment's
Is your mic on? Okay. Might have to put it closer to your.
when equipment's bought through the municipalities, they get a municipal rate on the price of the equipment is. And then when they trade it back in, they get actual cost on it. So many times I know different municipalities that are almost trading every year at no cost, depending on the dealer and where they're gonna resell it. I worked in construction for many, many years and we bought those pieces of equipment that they would trade back in at those prices because all these municipalities would trade in every year to be able to keep new equipment, and it costs $1,000 or $2,000 back then for them to keep brand new equipment and never having to go and pay that big expense again.
So, Supervisor Scott Pease.
I agree to a point. You guys put stuff on Wisconsin surplus and we were taking $10,000, $20,000 hits on some of those trucks. And how can you justify a 5,000? That isn't the case.
Keep going, Supervisor Dolan.
Flip back over. Apologize, my notes are written. Not scratched on this piece of paper. All right. The fund balance overlay, we talked about that. Wages and benefits. So if I'm understanding this correctly, the sheriff's budget for 2026 is 7 million, health and human services, 7.2, planning and zoning, 563,000. Do we have any reference here to what was actually spent?
Mr. Chair,
Yes.
the 2025 is not over, so we wouldn't know what's actually spent on wages and benefits at this point.
Is there any way to do some estimating? We're only talking about a couple more months. Like if things continued as they are, right? So what's the estimated spend this year? Because I don't know if $7 million is too much. I don't know if $7 million is not enough.
Well, that 7 million is only the levies, so that's not the total budget.
But that's just their wages.
Okay, yeah.
That's just the wages.
Yep.
So, I think that the sheriff in particular, and I'm sorry, I'm not as up on health and human services, but typically underspends his budget. So I'm just curious where we actually come in at. And I'm not trying to take anything away. I'm just looking for a comparative, if that makes sense.
Mr. Chair?
Yeah.
So our process for budgeting wages and benefits is typically we'll budget for, if they're a vacant position, we're going to budget for family health insurance because worst case scenario, they pick up family health insurance. So, and then there's also going to be those positions that vacate during the year and then they stay vacant for a month or 2 months or something. So then they're underspent. We can't budget anticipating that we're going to have this turnover. We tend to budget for worst case scenario where we are budgeting for the family health insurance and that the position is filled the entire year. So that's typically why you're going to see underspent budgets for wages and benefits.
Fair enough. Thank you. A couple more questions here. Solid waste. It says that we're going vertical. Did we already fill the new cell? Or are we pre-planning?
Mr. Chair?
Yes.
We did not fill the new cell yet. I can tell you what percent it was full as of the end of 24, actually, if you'd be interested in that. Yeah, cell 6 was roughly 21%, 22% full at the end of 24. So we have to plan for the vertical expansion. We have to get permitted for that. Once those cells are full, then we would go vertical at that point.
Didn't we just open that?
Well, Mr. Chair.
I know the life is what, 4 years or 5 years?
Typically they're permanent. I think they're permanent for about 7 years. But we also have cell 5, which is about 58% full, which that one was open in 2019. So they kind of fill from like one side to the other.
All right. And then with the, just 2 questions left, I promise. So on the proposed revenue slide that you have, where, we've got in the expenditures, we've got the sheriff and things along there, but doesn't he also generate revenue to cover some of his costs? So like with schools and courthouse, isn't there income from that we get reimbursed?
Mr. Chair? Yes, there is.
And where does that reflect?
In here?
Yeah.
That's going to be probably intergovernmental charges for some of them for the school districts. A lot of it's probably going to be under like miscellaneous revenue. It's a very small amount of revenue that they do collect.
But those revenues will be under that budget. area.
Under the sheriff's budget in
Yes.
particular? Okay.
Yes.
All right. And then last thing, Kyle, on the section that you added at the very bottom with the capital projects. I get when we get further out, things are just kind of wild estimates. But in 2028, particularly with fleet, go from roughly 600,000 a year on fleet expenses. In 2028, you're jumping to 1.1, 1.2 million, 2029, 1.6 million. Is there something lingering out there in the future that we don't know about, or is that just a placeholder?
Mr. Chair, that would be, so you're talking about in the future, past 2026.
Yeah, because you're showing 28 and 29,
2029.
and those are like 1.2 million, and so like more than double what the next 2 years are.
Yeah, those are very likely placeholders for potential projects that may potentially get pushed down. I know I'm just pulling up my spreadsheet really quick too, because I have it all labeled on my spreadsheet as to what category they all are. And I believe the categories are listed on the spreadsheet. So there might be some larger assets purchased in those future years or planned to be purchased in those future years. But yeah, I guess I would reference to take a look at the capital
You just
project worksheet.
Get back to me at some point. Thanks.
Yeah, it'll be in the budget book.
Do you think it's under highway or solid waste, or?
It may be under solid waste is what I was thinking. I didn't want to give you a for sure answer on the floor.
All right, thanks.
Okay. Supervisor Scott Pease.
I got a question on the building project. We okayed $2 million, and part of that was for the replacement of the parking lots. Now all of a sudden you're making it separate. I seem to think that $2 million is gonna come back for just the building, and the rest of it, we're gonna spend more money on it.
Mr. Chair. Yeah, so it's the parking lot. Where are we in the courthouse? It's like right over there, the northeast corner of Adams and 3rd Street. That wasn't initially, it was not initially in the building project for us to do that parking lot. Later on, it was identified by the maintenance department that was something that needed to be done, and to capitalize on having a contractor already in there mobilized, then we should probably get that included with it, but it's gonna get paid for separately by the maintenance department.
Okay. Supervisor Shelton.
Yeah, we keep referencing the minimum fund requirement. My question is, if you're saying it's 30% is what, that they're recommending, why haven't we moved up our recommendation to 30? And that would be followed on with, why don't we have a maximum? Because if we're so over high, just as Supervisor Dozel said, why are we increasing taxes when we're way over our minimum?
Well, one of the reasons why we're increasing taxes, we're only increasing by the net new construction, correct? And with the tax freeze the way it is right now, if we don't increase it by that $590,000 this year, we cannot pick it up next year. So that $590,000 would be a loss to the taxpayers. Let's say we didn't need it till next year, but we can't go back and capture it next year because the net new increase was this year. So really, it's not, the 590,000 will not be on the existing taxpayers. It's on new improvements by either new construction or increased construction by, taxpayers. So some of it might be on taxpayers that are here. If I put a building addition on my house, then I would be contributing into the new taxes. But if I didn't do anything with my house and my equalized value did not go up, I should not see an increase in my taxes. So the total dollar goes up, but only to the people that have the new construction. The net new construction. That's the only, it's not increasing the taxes across the rest of the tax base.
But our levy still stays high on our individual.
But that's why the mill rate goes down. You see the mill rate going down?
I see the mill rate going down, but property value is going up. So it just kind of balances.
Right.
Is the way I look at it. But my question is, why isn't there a maximum that we can keep in the bank?
Yeah.
Because, sitting at, 50s, 60s, or what we're sitting at here, like, mid-40s.
Mhm.
And I understand what you're saying, but at the same time, it's just, we're just taking money that we don't need, and then we keep coming back to, like, we can just look at the wage study saying, oh, we have plenty of money in our pool because we'll just take it from the general fund. We got plenty in there, but realistically, it's because we're not keeping a realistic budget. If I ran my house the way that you guys run your budget here, I wouldn't have any problem because it's unrealistic numbers. It's not real. I don't understand it.
Well, the $590,000 isn't even paying the increase in the wages and the benefits.
Yeah, well, even if we take away that 590 and then we look at what everybody else is paying, because I understand that you increase and there's that increase on the mill rate, but my taxes aren't going down on my property. My taxes are going to stay right where they're at or higher because my appraised value or whatever goes up. Then you just lower the mill rate. But if you sit there and run everything maxed, yeah, of course your budgets are wonderful. 'Cause I said I don't get it. I'll talk with Kyle on it when I have my meeting in November, and have a whole day to plan for the budget.
Supervisor Postowski.
Thank you, Mr. Chair. So if we could go to wages and benefits summary, please. And I'd direct everybody, please, to the county treasurer budget. Now, we had the 2025 budgeted wages and benefits were $263,264 and some change. And the 2026 budget has been decreased to $161,129 and some change, difference of about $102,000, I believe, if I'm correct on my math. So if we look at the capital projects balance for the county clerk, we have a $250,000 balance for a voting machine replacement. Now, citizens and I are questioning the need and efficiency of voting machines in rural Adams County. For example, we had under 200 votes cast in the Newchester County Board race on the last session, which took until about midnight to count and release the results. Now, however, there was a recount done, and it took us humans just under an hour, and I was standing over their shoulders watching every ballot. I think there was 150 total between the two of us in Newchester. Now it took us under an hour to count them twice. So, and then when we did the recount, I noticed.
So what is your question on the?
Well, here I'm
budget,
getting to it.
Postowski?
That allegedly the voting machine didn't count one of the votes. So, how practical are these and necessary are these voting machines here in rural Adams County where we have less than 200 or maybe a few hundred or 400 or 500 votes in each district, which this seems to kind of be confused with urban policies where you might have 10,000 votes in a district. That might be a little more justified to have a voting machine. So we justify, or how are we justifying a $250,000 expense when we can't justify an expense for our county treasurer of $102,000, which I think if I'd like her to speak on this, by the way. Can we call for
No,
the treasurer?
we have questions and there's other people that want to.
Okay, so here, how are we justifying this? Can somebody please tell me this before I go on?
Mr. Chair.
Yes.
We typically use the unassigned fund balance to fund capital projects. This is a one-time infusion to the county clerk's capital project fund to catch up what we haven't been funding for the voting machines. If you recall, the voting machines were purchased using ARPA funds. We have not been setting money aside for eventual replacement of those voting machines.
What's the life expectancy of these voting machines? I mean, what goes wrong with a
10
voting
years,
machine?
10 years.
Okay, so.
They've already been in place for 5 years.
I'm just trying to justify the need for them, period, why we don't have humans. So at this time, I would like to motion,
There's no motions for the budget
I
here.
would like to reallocate funds, and it's on the floor, so why can't I do this, Mr. Chair?
This is just a presentation.
Well, in this presentation, I'd like to reallocate these funds, so I'd like to motion.
You're out of order. You can make that motion at the board meeting if you want.
This is
Well,
noticed.
I just
as a
showed my hand, but okay,
No.
I'll do that, thank you. Can the county treasurer please speak on this?
We have other members that want
Well, I'd like to
to ask
call up the
questions.
county treasurer to speak if she'd like to speak.
No.
Mr. Chair, may I speak?
You may, Supervisor Edwards.
Thank you. I just thought I'd let you all know that you were complaining about availability on this budget. If you go back to the admin 5 meeting of the 3rd, the budget proposal that we received again tonight was at that meeting. So everyone here has had availability to look at this for well over a week. Thank you.
Supervisor Rick Pease.
Kyle, I have just one question. You mentioned sales tax. Where does that fit in when you look at the budget revenues, and what category is that in?
Mr. Chair?
Yes.
Yeah, so sales tax goes to the debt service fund.
Debt service fund. But that's not on here though, unless I'm looking at it wrong.
It's in one of the pie charts.
That's what I'm
Or
looking.
those are expenditures.
All right, found it now. All right, that's all I want to know. Thanks.
Okay. Supervisor Posdowski.
Thank you. Capital projects, and I might have missed this, but we had these expenditures. I just wonder where we could find these for maintenance. I'm just gonna go through these real quick. Maintenance.
This is only an example here. So in the board book, the capital budget will be in there. It's part of that, and the capital budget is like 130 pages long.
So we can find these.
Yeah.
Okay.
By each department will be listed, and Kyle just went through this one for an example.
Right. I want to make sure we all know where to find these. So
Right.
thank you. And let's see. I'll rest for now. I'll let somebody else.
Okay.
Thanks.
Questions? Other members? Okay. Seeing none, we'll move on then to ordinances. When the clerk is ready. Ordinance number 21.
Ordinance 21, 2025 to rezone a parcel from A1 35 exclusive agriculture district to A1 15 exclusive agriculture district, 34.73 acres, and A3 secondary agriculture district, 5 acres in the town of Colburn. Recommended for enactment by the Adams County Planning and Zoning Committee on this first day of October 2025. Gilner, Dozel, Paler, Nachreiner, Carvillo, Barud, Thiessen.
Motion and act by Supervisor Gilner, second by Supervisor Barud. Ordinance on the floor, Supervisor McLaughlin.
Thank you. Just so for clarity for the board, I believe I'd be correct in saying the original parcel is 39.73 acres. Is that correct?
Director Grant.
Yes, it is.
Okay.
Okay, any other questions? Okay, seeing none. Please vote on ordinance number 21.
Total votes 20 yes.
Okay, the vote passes. Ordinance number 21 is enacted. When the clerk is ready, we'll move on to resolution number 24.
Resolution 24, 2025, resolution to request support of the state investment for income maintenance. Recommended for adoption by the Health and Human Services Committee the 6th day of October 2025. Edwards, Hickethier, Gabarsky, BPs, RPs, Shelton, Harvey Beaversdorf.
Motion to approve by Supervisor Rick P., second by Supervisor Edwards. We have resolution number 24 on the floor. Discussion or questions? Supervisor Doldal?
Mr. Chair, just a quick question. Is there someone here that can elaborate on this? I mean, it's a great read and it's interesting, but I gotta tell you, I got lost halfway through it. So if they could just.
Director Olson?
Explain it quick.
I would love to give you the Cliff Notes version. So essentially, counties across Wisconsin are being urged to pass a resolution asking the state to pick up the federal share of the administrative costs of the SNAP program that came out of the changes with the federal big beautiful bill. So we're basically asking the state to pick up at least 50% of the share that has changed. Actually, it's 25% additional cost. So we're asking to not make it a local cost and that it's at the state level.
So if this doesn't pass, then that burden would stay with the county?
So right now the resolutions are intended to put pressure on the state to pay this. And if the state does not pay it, then assuming it will roll downhill and become a local cost.
Thank you.
Any other questions? Okay. Please vote on resolution number 24.
Total votes 20, 19 yes, 1 no, voting no, Podolsky.
Okay. Resolution number 24 is adopted. When the clerk is ready, we'll move on to resolution number 25.
Resolution 25, 2025, resolution to authorize application for a surface water grant for Easton Lake Healthy Lake Projects. Recommended for adoption by the Land and Water Conservation UWX Committee the 7th day of October 2025. West, Churko, Morgan, Sammelstead, Gabarsky, Mary Lou Paler.
Motion to adopt by Supervisor Churko. Second by Supervisor Dave Gabarsky. So we have resolution number 25 on the floor. Discussion or questions? Supervisor Postowski.
Thank you, Mr. Chair. This came through Land and Water, and I called for more research and more options to be presented. Here are some examples, and I'm just going to read through these real quick. So we look at barriers, and we say, what kind of barriers? Are they berms? Are they debris and sediment barriers? Are they live vegetation? Who is doing the study on what's needed? Engineering companies or the DNR? Okay, here's
Supervisor Postowski, what does this have to do with the grant?
well,
Because-
these are things, options that we did not consider or don't have listed. So I'm wondering why they haven't been presented as options. They weren't presented anywhere. And then I'm going to go on.
I don't know.
I
I don't
mean,
know how
Mr.
you
Chair,
would say
please.
that they're not presented. We're applying for a grant that the
Mr. Chair,
DNR has done research on and done the research on, and I don't know if it's a.
they're not listed in any of these options. What,
I agree with the chair, though. You're not voting on how to spend the funds at this point. You're just voting on whether to apply.
yeah, but has there been sufficient research done in this area and options considered? I mean, and no, apparently there haven't.
Is that relevant?
Well,
Would
what
you,
are
would
options
you
have been-
rather the county not get the $1,000?
well, I mean, how do we justify this action when we don't have any other options listed?
Excuse me, Supervisor McLaughlin.
Thank you.
If you
I'll throw in my 2 cents worth. Things like this, I don't necessarily disagree with Supervisor Pozdolski, but you're applying again, like you said, just for a grant. If you get the grant, I'm assuming there's gonna be time, and then you could do the checking on the things. You don't put in all that effort and this cash money out to do research on it when you don't even know if you're gonna get the grant.
Well, and this is for a specific item where there is a need, and it has been, we're applying for the money to do this one practice, correct, Colton? He's shaking his head, yes.
What justifies the grant, awarding the grant? I mean, has this initial research been done? And we're not seeing it.
Okay.
And then furthermore, will there be shoreline restoration projects? We're
No.
talking fish habitat.
We're
all
gonna,
kinds of
go on.
Mr. Chair,
stuff before
Ready
me,
to go.
you know.
this total grant is for $1,000, is that correct?
That is correct.
Okay. Just make sure, because we're losing money at this point, so.
Yeah. Okay. Okay. Seeing no further questions, please vote on resolution number 25.
Total votes 2019 yes, 1 no, Podolsky.
Okay. Resolution number 25 is adopted. When the clerk is ready, we'll move on to resolution number 26.
Resolution 26, 2025, resolution to authorize application for a surface water grant for Friendship Lake Management Plan implementation, recommended for adoption by the Land and Water Conservation UWX Committee the 7th day of October, 2025. West, Churko, Morgan, Sammelstead, Grabarski, Mary Lou Paler.
Motion to adopt by Supervisor Churko, second by Supervisor Rick Pease. So resolution number 26 is on the floor. Questions? Seeing none, please vote on resolution number 26.
Total votes 2019 yes, 1 no, Podolsky.
Resolution number 26 is adopted. Look for a motion to approve the claims per diem and mileage. Supervisor Bork, second by Supervisor Carlson. Discussion or questions? All those in favor signify by saying aye. Those opposed signify by saying nay. Claims per diem and mileage are approved. Next meeting date is November 11th. In the board rules, it says either 9:30 or 6 o'clock. In the past, it's been 9:30. The last couple of years, we've done 6 o'clock. You want to stay with 6 o'clock? Yeah. Well, unless it's gonna go, unless we're gonna be, 11 hours, maybe we should start at 9. So. What? Yeah. 6 o'clock? Or,
No,
yes,
we're saying
I don't-
9:30.
what? So, okay, we'll stay at 6 o'clock then.
I don't know anybody else's, but my battery's about dead in this, and I think we're gonna need that by next meeting.
Okay. Okay. Okay, so November 11th, 6 o'clock. So see you then. So I'll adjourn the meeting. Thank you all.